G'day traders, Sam here from Trade to Prosper to give you a crypto update or crypto review on S.SAri, a Bitcoin smart contract platform. Today is Wednesday the 21st of June and we had a good day. Bitcoin has gone up, and how we're tracking at the moment, hit resistance, but we had a good breakout and potentially more. So let's look at stacks and then continue on. So I want to look at the macro. With the macro, what we have is a Wyckoff distribution, pretty obvious. How much did that drop? It dropped 93%. A lot of the alts did the same. So I was looking at the cycle and see how that fits. It doesn't quite fit the cycle, a typical cycle, unless we on the way up the cycle fits. On the way down, this could be seen as a separate. So we can have two structures like that, and then this makes sense. It's a hard one, isn't it? Sometimes you just want to see simplicity. But that looks like one big structure. Although that is accumulation there, it really comes down to, I suppose, let's say non-logarithmic. Doesn't quite help. Maybe that does. So go back to log. Scaling might be an issue. Just when we look at that diagram, we're looking for what we have is a wave 5 count, definitely on the way down, and a micro wave 5 count, and is this an ABC? This is the thing. Anyway, let's have a closer look and see what's happening. What I do is this fits the Wyckoff bottom. One of the four schematics I have is this. And it seems to have done that, right? It's done the bottoming, it's broken out, and now it's pulled back. And what are we doing here? This is what we're going to look at. So that's one phase I'm going to look at. We've done the bottom, pretty much. What's this phase going to look like, and why there's certain levels of importance. All right, so we can get rid of that. What we're going to do is apply fibonacci. First rule, from 0 to 1 to the top. We could put the wick or we could put the body. And when I look at the chart, this neckline, I'm going to make it fit the body of the candles. And this neckline fits on the 618. The 65 is probably there. If I put the wick up, you can see the 65 slightly above, and the 618 is there, but it doesn't match the neckline. So it's a hard one, but let's leave that there. Now that's one Fibonacci. Got to pick the other Fibonacci. Let's see. And what we've done here, okay, let's just do that. Not sure why we're doing that. That doesn't make sense at all. So let's get rid of, that was the reverse workout. Okay, we'll leave that there for now. That was reverse engineering. I'll get back to that. Here are the others. So we've got our bottom. Let's make this black. And obviously make it a bit bigger so you can see. Top is 1. Down here is 0. And you can see 618 is holding it up. And 786 doesn't quite do it. If we were to put this up there, 786 perfectly there. I might just put this down here for a sec. Sort of explains this level here as well, the neckline. So we've got, that's a big macro. Do we have confluence? Yes, we do have a bit of confluence. 382, not quite. Why are we there? Let's have a look. So if we were to get that, what we're trying to do is get a story right with Fibonacci. And so what we have here, I've made the 618 our important level, the neckline, and you can see once that's done, the 1.618 is the bottom. And then you can see the 1.414, 272, all makes sense, even the 1. So that model works. So we'll put that Fibonacci into the group and we'll just enable them all. There we go. We've got the neckline, or this prevailing trend line, so we can do that. We don't know when that's going to come in handy. And that's what we have at the moment. We have a wave 5 count that's completed from here to there. 1, 2, 3, 4, 5. What's this? This is a correction. It's probably a 1, 2, 3, 4, 5 correction, and now we're looking for up. If this is the bottom and Bitcoin is doing the bull run, what we can say then is this is a big assumption, obviously. I'll make it bigger. I dare say that this is a 1, 2. 1, 2, and the bull run. Now, what do I have here? If I'm right, I can put that as 1. And we've got these targets, actually, we already done that. We've got 1.272, 1.418, and we should put the 1.618. They're there. So we can probably hit that or that, but we've got this parabolic curve and we don't want to break it. Now, we're going to talk about this down the track, but at the moment I'm thinking this way. What do we have here? Immediate short term. I think it's a Wyckoff continuation pattern. So we've accumulated, we've pulled back. So what we have, reaccumulation. Give me a sec, guys, and I'll bring it up. Yeah, this is just an example. If it lets me do it. No, it doesn't let me put it there. Okay. Let's see if I can post it. Doesn't do it. Give me a sec. Damn it. Is it too big? So this is the chart I was looking at. I think it's too big to put it in there. So what we have, this is a reaccumulation. So price comes up, finds its buying climax, pulls back, and then does another thrust, and you can see that. So this is a extended flat accumulation. So we're probably doing this. So far it fits into it. And from a Wyckoff perspective, that's the up thrust, pull back deeper than we thought, and it does happen. So that's the neckline, and this is basically a squeeze to the longs. So you'll have all your stop losses there. This is a squeeze out. So liquidity, and then bang, it goes up. Nice, isn't it? So what we have is this this box here is a reaccumulation, and I dare say this is going to be a shakeout phase. Yeah, this is going to be a resistance, but it's going to be a shakeout, and then if it's a true bull market, it'll go, and then that's the beauty of this trend line. So we have that reference. So now it's a bump and run strategy. It's pulled back. It's find the accumulation level. We are continuing on, and then if it breaks out, this is the level that is confirmation that we're going to go bullish. Now, from that perspective, we will then look at Fibonacci from here to the top, and these are our immediate targets, these fibs, and you can see the neckline there. So that's going to be a strong resistance. So price will come and it's probably pull back, and that's where we'd probably for this run potentially, and then come back down. Maybe Bitcoin will do that, and then we have another reaccumulation. It might not be a deep pullback. Let's see. That's 40%, so that's probably deep enough. And then if it's a true bull market, we'll continue on. And this is my thought. We'll have a double top where we go nowhere and we just pull back. So we just stay around here and then come back down again. It really depends what Bitcoin's doing at the time, really. If it's a true bull run, and it's going to be, and if just say Bitcoin is on 50k or much more or less, whatever the case may be, then we might. So this is our base 0, this is base 1, this could be base 2, and then we have this topping off structure over here. There is that slight chance that this could be really bullish and we go down, we go to that wave 5. Now how do I get that wave 5? Well, you can see if that's our 0 and that's our 1, then we've got 1.272, 1.414 and 1.618. So if this is our initial run, that could be our seasonal top, somewhere there, pull back. Let's just get rid of all this. And that's how I got my elite wave macro. Wave 5, that's a free. So remember, wave 2 to 3 is going to be the big one. We had our little one here, and confirmation that if we break this, we are likely to continue on with the bull run. And it might be one of those cases where we don't break this and Bitcoin gets to its target too early, and the alts haven't really get going, so it just pulls back, and then we have this bigger formation of some sort, double top, comes back down, and then comes down, and then we do that, and we get this triangle of some sort. This will be a boring stage, accumulation, and then up. So it really depends on what Bitcoin does, but these are the models that I have in plan. For the short term, how do we trade this? Let's have a quick look, and let's look at the small time frame. So we had this channel, and it was definitely a resistance trend line, like it's got many points. We broke out of it, it went bullish, and it didn't care about this level at all, neckline. So this measured move, actually the targets for this is there, and so yeah, we're probably there based on this neckline. Right there actually, where the wicks were, so doesn't make sense. It does. So that neckline, that's pretty much it there. So we'll probably get a pullback. How deep? Well, so we didn't really bounce off this at all. We didn't back test this. So it could likely come back that far. How much is that? Let's see. That's turning out to be a rejection candle, 14% pullback maybe. So small time frame. Yes, that's a rejection, right, on the 1 hour. There we go. So that's definitely probably a shorting entry with that candle. That's a good candle to enter a short right now. So I'm going to leave it at that, guys. Short, and then look for a retest or a reversal of some sort. It's difficult to know, but that does look like a strong pin bar candle. Usually means a rejection, good shorting position, and then what we'll have is a range of some sort somewhere. Could be here. We've got some lines, or it could come further deep, but that is definitely a rejection, and therefore you can see how these lines all match up. Back tested this line, bang. So just resistance, then back tested it, and then went up. Beautiful. Similarly here, I think. Look at that. Another bump and run strategy. Rejection, rejection, passes it, retests, and up. So this is looking beautiful as an example. And I'm going to leave that there, guys. Want to get this up as soon as possible. Talk to you soon. Cheers. Please give us a like, subscribe, and share. Cheers.